Yeah, I have a downside target for this year of 3,300 on the S&P. So that is pretty substantial considering we're almost getting towards the halfway point of the year. And I do think we get low 3,000 in 2024. So I am looking for significant downside. In fact, at this point in time, I'm actually almost at my most bearish
Hmm.
point of this market cycle.
Gareth Soloway is a venerable market maven, whose proficiency in technical analysis has garnered him tremendous acclaim amongst his peers and clients alike. In this video, Gareth Soloway discusses about the current situation of U.S. economy and the latest GDP figures. Soloway also shows his concern about the next steps taken by Fed, upcoming recession, the banking system, and why he expects the S&P 500 to crash 25% in 2024. Gareth Soloway has predicted an atrocious market downturn for stocks and beyond in the near future after the United States Federal Reserve announced a slight and transitory recession, which he described as sugarcoating. While U.S. GDP increased less than expected in the first 3 months of 2023, U.S. stocks edged higher on Thursday as corporate earnings for mega-cap tech remained upbeat while U.S. GDP growth came in below forecasts. On economic front, gross domestic product increased less than expected in the first 3 months of 2023, adding to concerns that a recession may be around the corner. Before proceeding further in this video, make sure to hit the subscribe button below for more recent updates.
Solid upside too in the S&P 500. The Nasdaq 100's having a monster move. Part of that's on the back of the Meta earnings. Obviously, we had the earnings yesterday from Microsoft as well. So very good earnings news, as you had mentioned. But I think the lower GDP numbers are keeping the market and investors focused on the very near-term benefit of the Fed potentially not hiking or not hiking as much. And I caution the market. I caution investors when I see this, because ultimately what we know is that when GP starts to slow down, we might actually turn negative, and it could dictate that recession is a looming indicator, or that we're likely headed towards recession in the second half. So I think the market itself is rejoicing, saying, okay, a weaker GDP number means, hey, the Fed may not have to hike as much, or maybe can be a little bit looser on their monetary policy. But I do caution that ultimately, if we spin into a recession, the Fed is not going to be able to lower interest rates much because inflation is still elevated. So I'm still in the camp that we're in for a very sharp decline in markets. And the reason I say that is twofold. Number one is that it's almost going to be impossible for the Fed to loosen rates to the amount that will be needed to get massive amounts of money to flow back into the equity markets and push us to new all-time highs. So again, if we think about it like this, right? How much did Powell raise interest rates from the start of this hiking session or season? And ultimately, how much is the market up or down in that period? And yeah, we've kind of stabilized, we've inched up a little off those lows, but the Nasdaq and the S&P are still well off their all-time highs. So the question is, how does he come to the rescue of a market when inflation remains north of 3%, 4%, 5%? And even again, I still think inflation is going to continue to come down. I just don't see it getting back to 2%, where he can marketably drop those interest rates back to the levels they were at pre-hiking process. How about this? If they call for a mild recession and it turns out to be a very bad recession, and we have 3% inflation, I would absolutely agree that at that point, the Fed will have to come out and hike rate or lower rates substantially. The question is, at that point, what is the discount in the stock market? I mean, if we see a deep recession, what are the earnings looking like for companies like Apple? What about, Microsoft that just reported that was very good? But if we do get in that deep recession, where are those earnings? Where's that multiple for the S&P 500?
Bitcoin recently experienced a temporary drop, but it has since made an impressive comeback. However, some financial analysts remain uncertain about the future of the cryptocurrency market and the leading decentralized finance asset. They anticipate further declines before these assets can fully recover. Additionally, the trading expert warned that the presence of a large number of digital assets that have no use case might be contributing to the prolongation of the crypto winter that he believes has almost been too easy. Whether Soloway's predictions come true and Bitcoin actually drops to $12,000 or even $9,000 will depend not just on historical chart patterns, but also on the general crypto market and macroeconomic sentiment, as well as the developments directly related to the maiden cryptocurrency itself.
So for me, I'm not convinced yet that the winter is over yet. I think it's almost been too easy of a winter in respect to, yes, we declines, but we still have a massive amount of crypto coins out there that have no use case, no real reason to be in existence, and they're still in existence and they're still getting pumped on a daily basis, right? In fact, recently, I mean, Pepe and all these other ones, it's just flooding the market and going up ridiculous amounts. So I'm a little concerned about that. To me, the 30,500 level continues to be the level on the charts that I'm keeping an eye on. So if we just take a look at the chart here, right?
Yeah.
And we just kind of we can see that the Bitcoin chart ran up to that 30,500. It collapsed back on it, below it. We've now come back up a little bit because of the fear in the banking markets and so forth. But for me, this level is the key level, this 1,500 level. Can we get through that? If we do get through that, then I actually think the low is likely in on Bitcoin at 15,700. But again, I would just caution people at this point, you look at what Bitcoin has gone up and you look at the 2018 and 19 bear market, it had bigger rallies in percentage terms during that bear market, and people again seem to get that. So don't be fooled. I've been through many bear markets in commodities, in the stock market, in crypto in my trading career, and sometimes it turns out to be the lipsticks on the pig here, and it could still roll over and head lower. So I still think there's a chance for 12 to 13,000, maybe even 9,000. But again, that 30,500 level is the level I'm watching. Fear for Bitcoin is not that, it's going to get outlawed. That's not really an issue for me anymore. It's more that if we do see the declines in the equity markets that I expect, if we're looking at 20, 30, 40% downside potentially over the next 12, 18 months in the stock market, how does Bitcoin, which still is being traded as a risk asset 80% of the time, how does that hold up against that? If you see panic, and we saw this yesterday, we saw the stock market getting back down after a gap up on those Microsoft earnings, and Bitcoin was up big early in the day and then gave it all back by the end of the day. So that's my fear, is that if you're going to tell me that the S&P is down 30% in the next 12 months, how is Bitcoin not down on that and potentially down significantly?
Soloway suggested that the Federal Reserve, which hiked rates by 475 basis points since 2022, would cause more tremors in banking. He highlighted the case of First Republic Bank, which lost 95% of its stock price since the start of this year. While it seems like U.S. officials are in talks to rescue First Republic with the Federal Deposit Insurance Corp (FDIC), Treasury Department and Federal Reserve reported Reuters. Sources told CNBC's David Faber that the most likely outcome for the troubled bank is for the Federal Deposit Insurance Corporation to take it into receivership. The stock slid 43% and was halted for volatility multiple times.
I'm not sure if it'll collapse. I think it has a lot of big name backers. We saw JP Morgan and a lot of other big banks throw 30 billion into it. To me, the issue with First Republic was they announced earnings and they announced that they 40% of deposits had exited the bank in the last quarter, which is a horrendous number. But honestly, a lot of us expected a bad number. We know how much it dropped going into earnings and so forth. But to me, the kicker was when they came on the conference call, right? They literally didn't take any questions. It was 12 minutes long and they walked right off. Like if I was JP Morgan and I just put in $30 billion with a bunch of other banks, I would have been pissed, right? Think about that, right? Here it's a destabilizing impact to have them walk off that stage and you just gave them all this money. It's like the least they can do is answer questions and kind of calm fears in the banking market. And they didn't do that. And again, their stock got rightly punished because of it. It doesn't show management's on top of things at all. Not only did they screw up with risk management, but now they can't even handle a simple calming conference call. I do think that the regional collapse that we did see and that we continue to see, it's a precursor. It's a tremor. It's telling you that what the Fed has done now was earth-shattering in terms of raising rates as quickly as they did to try to stem inflation. And I'm sure there's going to be more tremors. In fact, if you look at loans, right? I mean, we talk about auto loans. There's massive amounts of defaults going on there where people aren't paying their loans. So there are things that are breaking now in the system. The question is, how long does it take to fully filter through the system?
A widely publicized Eurozon SLJ Capital report claims that de-dollarization is happening at a stunning pace, with the US dollar dropping from 73% to 58% of global reserves from 2001 to the present. The pace of de-dollarization has hastened since Russia's war with Ukraine, which saw the weaponization of the dollar through US-led sanctions on Russia. The BRICS, Brazil, Russia, India, China, and South Africa, nations have responded by calling for a new reserve currency. Some, like Brazil and China, have made deals to conduct trade in local currencies. While acknowledging that nations are leaving the greenback, Soloway forecasts that it would take 10 years for the dollar to lose its status as the main reserve currency. He believes that like any other reserve currency, the dollar also has a specific age or time limit before it gets replaced by another currency.
And everyone's looking for like the dollar collapse. That's not going to happen. I mean, it's not going to be an overnight event. It's going to start. It's going to continue. My guess is in 10 years, things look a lot different. But in terms of what I'm investing in today, this second, that's not really on the radar yet. Again, that's one reason, by the way, to own gold, to own potentially Bitcoin. So I guess in that respect, it is on my radar. But I also buy those things for other factors as well, such as a recession and other things. But for the most part, it's a longer term trend that's going to continue, and it will happen. There's no doubt in my mind that we're headed towards a different reserve currency. In fact, if you look historically at reserve currencies over the last 500 years, the dollar has been a reserve currency for approximately the same amount of time that every other reserve currency historically was a reserve currency. So
Bitcoin's value has been positively impacted by recent risk-off market sentiment. While Gareth Soloway believes Bitcoin needs to go above $30,500 to signal a bull market. On this note, we conclude our video. Do you agree with Gareth Soloway's perspective about stock market, Bitcoin, and future of dollar? Share your thoughts in the comments section below. If you found this information helpful, then like this video and subscribe to our channel. We will bring you more updates in the future.